With assets on the rise, so is something else. Talk of a bubble. We've done some polling, collecting investors' thoughts on whether asset gains have gone too far. Mia Saini is here with what we found.
Good morning. Well, let's look at social media and internet stocks because this is a category that investors in our latest survey say is close to a bubble territory. Now, this is a time when Twitter, of course, that stock more than doubled compared to their market debut. An overwhelming 82% of those investors we survey say social media and internet stocks are in a bubble. And I'll break it down for you even further. In fact, 49% say they're already in a bubble and 33% say it's on a verge of bubble. Now, during this time, also, they have a view on the global economy and global stocks at a time when the MSCI World Index is up 26% this year and has reached the highest level since 2007. The question, are global stocks in a bubble? 20% say yes, and 45% say they are near a bubble. Now, overall, though, bulls are on the rise. Newsletter writers, according to Investor Intelligence, classify bulls within these newsletters and say that's at 53.6%, which is at a 2-week high. And of course, we know that perhaps a high level of optimism increases the likelihood of perhaps lower market levels in the future. It's hard to put a time frame on that future, but you can look at previous bubbles, the tech bubble, as well as others, to kind of get a sense of what could happen when one takes one position over the other.
Well, speaking of bulls, we just talked with Chris Bertelsson over there and in Florida, and just talking about how Bertelsson takes a look at the S&P 500 chart and the Chinese ETFs and really seeing an opportunity to buy now in China. So how are investors, I don't know if he's an individual view or if it's a part of a broader view on China.
Sure. So when you take a look at China, let's start with the property part, because that is the part that investors in our survey say is unsustainable. In fact, 46% of respondents, that's the orange slice on your screen. 27%, that green slice, say we are on the verge of a bubble. Makes sense. New home prices in China's 4 major cities rose in October by the most since January 2011. Housing sales have also jumped 33% in the first 10 months of this year. Now, away from property, to answer your question, if you take a look at the Chinese economy as a whole, 44% actually say that it's stabilizing. So that's the part that I would draw your attention to. Whether or not that's an opportunity for you to buy stocks or exit out of, I am not the one to make that call or to opine on that. Clearly, the analysts that we talk to all have their own views. Many I've talked to say right now, you need to get out of financials. Financials are just overvalued. But there could be some upside in other stocks. For example, consumer stocks. We heard earlier with a one-child-only policy that a lot of the stocks that concern raising a family are doing quite well. So there are perhaps some picks in the consumer discretionary sector and the non-discretionary sector. But for property stocks, it's hard to tell right now, considering what's happening with the fact that not only is there more supply, but there's also a lot more demand.